Welcome back to another Investors Row podcast with your host, Ramesh Fakori of the IRA Club. We're always glad to have you as we talk a lot about alternative investments and love educating our students, our investors, our podcast, our IRA Club members, what's available out there, right? And one of the things that I always hear as I go to many events, as many of you have probably heard in past podcasts, is live events where I see all different types of investment opportunities, in particular oil and gas. And a good friend of mine, Mr. Jay Young, who is my co-host for this afternoon, is going to break it all down for you. Jay, you know, one of the things that I always laugh at when I speak to you is you always hear family legacy. And yours is the epitome of that because you are a fourth generation gentleman who is taking over from you to your father, your grandfather, and so on. This specific type of industry called oil and gas is what we're here to discuss. Yeah. Tell me, as you, the founder and CEO of King Operating, what is that? How did you even get involved in that?
You know, when we think about it, when I was growing up, I didn't know any different. It's like, you know, if I guess if you're in a mining town and everybody in your family works in the mine, it's like you talk about mining, talk about the people and everything else. Well, we talked about oil and gas. We talked about, fracking or drilling or who's doing what, when, and acquisitions and things of that nature. So it really became kind of second nature. And my great grandfather, had 12 kids, and with those 12 kids, I mean, man, if you're a man, you're in the oil business, and if you're a woman, you're married to somebody in the oil business. Man, I mean, that's just the way we grew up. And then my grandfather was in the business, and these are lifers. I mean, they spent time and effort on the oil business and worked for companies. And my dad got in, and then he took another job when the oil patch went down. The oil company, at $3-4 a barrel, couldn't handle the payroll, and so my dad got out and stayed out, and he did not want me to go into this business because of the cycles, because you've got to know how to mitigate risk. You've got to know a lot that there is to know about it, and that's why we've been extremely successful in what we do and how we do it, because it takes a lot. It takes a lot of know-how and people. People's the most important.
And here's the thing, Jay, I'm not going to steal your thunder, I promise, because a lot has changed in this industry, right? Especially in the oil and gas the past few decades. Yeah. And I know you're going to elaborate a little bit more on that, but we talk and we educate why you may want to use a portion of your retirement dollars to invest in oil and gas. And one of the things I always say to our IRA Club members is stick to what you know and understand. And this constant, hunger to learn more about what's out there. You wrote a book, right? And tell me a little bit about it. I'm not going to jump too much, but outside of saying the upside of oil and gas investing, right? I mean, you've hit, it's a bestseller, a New York Times bestseller. Correct me if I'm wrong.
Yep.
And tell me a little bit about what's the inspiration behind this book.
I ran into a friend in 2015, and I asked him, he was a multifamily guy, and I asked him, how's business? And he said, unbelievable. He said, I've got more investors than I do product. He said, I can't find enough apartments. And I said, man, that's a great problem to have. And so I listened to what he did in the real estate business with multifamily, with the value add and the returns that he was getting back for his clients. And it was extraordinary in the sense of, real estate prices were going up, but if you add in there the value add and the know-how with this team, it's just the returns are astronomical. And so we're in the oil business, and I wasn't going to go, okay, Jim, we'll jump in the multifamily business. I didn't do that, but I started talking to some of my friends that were in the oil and gas business, and I was like, okay, well, tell me more about what you do and how you do it. And they were getting institutional money. And I'm like, okay, well, let's talk to individual investors, people that work, that want to put 100, 200,000, 500, whatever.
Yeah.
out of their portfolio into a project and get that return. And so we devised a plan. It took us some time. We're increasing the value, and we have fund one, fund two, and we're increasing the value because I've got another friend that I'm on the board with, and he increased assets and sold for $7 billion, 7 different assets in 7 years for 7 billion. And how he got his money and what all that goes into our recipe, if you will, and
Hmm.
putting our cake together and what all we need to do it. And that's kind of what we do. And having investors. So we have individual investors. So I wanted to write a book to tell investors there's a lot of good ways to invest in oil and gas, and there are definitely some bad ways. There's exploratory risk.
Uh-huh.
There is sponsor risk. Who do you go in business with? What kind of wells are they going to drill? What kind of trade do you get? And so when we did it and thought, man, this is it. This is the best way possible. That's when I've decided, you know what? I want to tell the big brokerages about it, or RAs or family offices. And I wanted that investor that if he wanted to write a check out of his portfolio, and they need oil and gas in their portfolio, everybody does, not just me. I have a lot of it, but I'm like, everybody needs it. So to tell people about it, I wrote a book
There you
called
go.
The Upside of Oil and Gas Investing, because it tells you it tells you a lot about oil and gas, things that you'll never really, I don't know. If you watch Landman, you may learn more about oil and gas than you do just reading the book. But the biggest thing about the book is the structure and who you do business with.
Yep.
And that's when we devised our strategy, if you will, for the investor.
Well, not too long ago, and this is a good segue to jump into, we had an IRA club client that signed up that you brought over and read your book. And one of the things that you talked about was using a portion of your retirement dollars that is IRA eligible to invest in your deals. So I think that would be a good way to transition. So for those of you that are listening, yes, you can use your retirement dollars to invest in oil and gas. Keep in mind, it is not you that's investing, it's your IRA or 401k. So many of you that may have, for example, Jay, you know this better than most. If you have a retirement account at Fidelity, Vanguard, and Schwab, they're not, these institutions, these custodians are not allowing you to use a portion of your retirement dollars to invest in your deal. Is that correct, Jay? According to your book?
Right.
So,
Not yet. We could in the future, but right now, no. I mean, we'd
as
have to,
well, let's
but yes.
just say that's 95% of private equity deals and funds that are across the country, syndications and whatnot.
Absolutely.
So what are some of the key benefits, right? You just said everyone's got to have oil and gas in their portfolios, right? Whether it's your personal dollars or retirement dollars.
Yeah.
Why? What's the upside? Talk to me a little bit about that.
Yeah. Well, if you invest in an oil and gas company, go in the stock market and think, okay, I want to invest in this. You
Mhm.
may get some dividends, you may get some upside, but with our projects and the way we're looking at this, we're looking for a 3x return in 5 years. Okay. That's kind of the basics behind what we do, how we do it. And what we're doing is we're building up assets over the next 3 to 5 years to have a really big sell, because you can't sell it's easier to sell $2-3 billion worth to a bigger company or to more companies than just a smaller deal. And I first started thinking, maybe this is, 10, 20 million, $30 million assets to 50. No, let's go to the billions, because that's going to open up our doors a lot more. So when you look at it, and when an investor thinks, yes, I want to participate, yes, they need to participate in oil and gas. Alternative investments has been off the charts. I mean, the book has done great. The investment's done well, and that's what we need to do is have our investors, and have, obviously, or we want to have more investors, come in and talk to us about strategize. I want to have some of my portfolio in oil and gas, because, if oil and gas is going up, inflation may be going down, real estate may be going down. It's all cyclical. And so
Yep.
that's when I feel like that, and I've been reading some articles here last couple of days, rig counts down in the Permian. It's about half of what it was, a few years ago. Well, what that means is we're going to have less supply on the market in the next 2-3 years, which means the oil price is going to go up. So yeah, we're looking for that 3x return for investors, but it could be better than that if prices do go up, a lot more than what we think. So we run our numbers at conservative numbers just to see how our portfolios are, how the numbers, and our engineers are, our people that look at it and they don't want to run numbers at $120, but if numbers went to $120, I mean, it could be like a 5x or 10x.
Yep. Well, the numbers always got to make sense. But in this case, let's talk about a real case scenario we just said it a split second ago.
Yeah.
Ramis Fakori, I'm going to use myself as the example, roll over, let's say, from my IRA at Fidelity or Vanguard over to the IRA club and want to invest into oil and gas, in particular, let's say with the King operating, I like to say, model. What is that process? Because your process is very unique, and I've seen your PPMs, and I've actually read a lot of that. Talk to me about the concept that you have, which is, I maybe am saying this wrong, correct me if I'm wrong, acquire, develop, and divest, right?
Yeah. ADD.
Yep. There's a process that you guys follow through. Tell me what that's like for an investor and why you make them feel that this is the right choice within an alternative asset.
Good question. I appreciate that. And I'll tell you what we do different. And that's what, I waited my entire career, Thomas, for this moment right now, because this is where we look at this and go, we put everything together, my entire, 30-something career, 35-year career, all this into right now, because what we're looking for is we're looking for the opportunity to talk to investors and tell them what we do. I wrote the book, and I hadn't put the title together yet, but I was up in Chicago with other Forbes. I'm a Forbes author, and I'm with other Forbes authors, and we're just sitting there. And this guy said, we're sitting at this table and just talking, and he said, "Tell me who is your number one client?" And I said, "Well, what do you do again?" And he goes, "Well, I'm a wealth guy. I have clients' money." And I said, "You're my number one guy." And he goes, "Why?" And I said, "Well, because you manage other people's money and you probably invest in oil and gas." And he goes, "Oh yeah." He said, "We invest in oil and gas right now." And I said, "Well, why?" And he told me to diversify and all this. And I said, "Who with?" And he told me. And I said, "Why do you invest with him?" And he said, "Well, because we get our, tax benefits, we get monthly income." And this is doing it outside the IRA.
Yeah.
But he said, "We get the tax benefits, we get monthly income." And he said, "Well, we'll get our money back in 3 to 5 years." And I said, "Well, man, where's the upside in that?" And he goes, "What do you mean upside?" He goes, "We get our money back and that's it." And I go, "Well, wow, what, come on, help me understand just a little bit more." And that's when I wrote the book, and I said, "Hey, the upside." So what it is, it's, let's say they do $100 million program and I do $100 million program. Let's just say we're spot on. They're a good operator. We're a good operator. They raise $100 million. We raise $100 million. They drill 10 wells for $10 million, and we raise 10 wells for $10 million. Now here's your difference. They raise 10 million, they drill 10 wells, and then the production turns on, and it declines, and it just keeps declining until all the oil is run out of all the wells, and you receive revenue from those wells for as long as they produce. You may get your money back, you may not, whatever. Okay, now here's the difference. We invest in those same 10 wells, and then all of a sudden, about 6 months later, instead of just letting it go and saying, "Okay, well, that's it," like they are, what we're doing is we're going to take that to the bank and we're going to go, "Hey, I need 30, 40% loan on this because I want to go drill more wells with that money. I want to go drill more wells with that money." And so therefore, you don't just have 10 wells that go down. Wells decline. That's why all these oil and gas programs are like, they're set up for failure. They're set up for failure. Ours isn't, because what we're doing is we're increasing the value because we're drilling 10 wells in the program. It's going down. Then we're getting a loan, and then we're drilling more wells inside the program. I don't know why nobody's ever done this or thought about it. It's crazy, because they just make their money up front, and that's all they care about. What we're doing is we're drilling those 10 wells in that $100 million program. It's going down. We're getting more money. We may get 30, 40 million. We go drill 3, 4 more wells. We go drill. You're getting increased value. You're getting increased dividends. You're loving it. I'm loving it. Everybody's going forward, and we're just really happy on what the return is for clients. See that over here? Here it's like it's just going down. Here it's like it's going down, then it goes back up because the value of the partnership goes up with that leverage
What
factor.
I wanted to ask Jay. So, what decide? Like, how do you decide where to drill? I've
Yeah,
always been intrigued on that. So, elaborate a little bit.
that's great. That's a great question. And I'll tell you what, and we have drilled in the wrong spots,
Okay.
without question. I mean, it's like, man. So what we've done now is, and going forward, it's a great question. We own a 60,000 acre lease near Amarillo, and that was 20 wells have been drilled out there. Apache drilled 20 wells. They had good results. They should have drilled them differently, which we did our research on. We know how to drill the wells now. It's a lot different. We're having success there. That's one place you drill wells that you know the oil is there.
Okay.
There's another place up in the mid-continent section. There's 6 counties up in the panhandle of Texas and some in Oklahoma, and the oil is already there. Okay. Now, these are singles and doubles. What we've done in the past and what promoters have done in the past is they take a bigger risk and they go, well, I mean, it has to pass through geology. We literally have 3 to 4 geologists. We have engineers that do all the numbers. The geologist says, oh, yeah, hey, you drill a well here, you're going to get, X number of barrels of oil. It's going to cost you this, you're going to get this. And then an engineer may come back behind it and say, yeah, I know, but man, that's a 70, 80% risk factor. If
Got
you have it, you do. If you don't, and we just don't take risk anymore like we did previous. We don't have to. With this leverage factor, the way the structure works, we don't have to now. So
I want to ask a question. So I have seen this where IRA club members, I see a lot of our clients use or invest in, better yet, mineral rights. Is this what you're referring to? Is mineral rights?
well, mineral rights is like royalty.
Okay.
You own royalty, and you don't drill for oil and gas wells, and it's minerals, or you just own a little piece of a mineral. So you may own a lease, 0.00 whatever of leases, and those you don't have to worry about drilling risk. You don't have to worry about anything else. What you have to worry about is it takes you a tremendous amount of time to get your money back. Those are not. There's not any big upside there. It's safe. It's like having apartments and rent. It's like you're just sitting there cashing checks, but there you may get 5 to 10% of your money back every year. But it's like you don't. And we did this. We did 7 programs called King Royalty Corporation back years ago. I got out of it because even 1031s don't necessarily work in this industry when you're looking for the returns for clients. You need to find that way the client can make money. And royalties, which is minerals, royalties is just hard to do that. It's hard to get clients back. You can't do 3X in 5 years
Got it.
with the royalty program.
Got it. Understood. So you talked, one of the things that I do like about you, Jay, is you're brutally honest. We talked a lot about upside. And I know, there's other risk that's out there outside of, we know we can't control the price of oil, and what you hear on the news. What are some other risks or factors that we could play, like that investors should be aware of?
Well, commodity risk is one of the biggest ones, I guess. If OPEC floods the market with oil again, it goes down to 20, 30 bucks,
Yeah.
40 bucks, that's a risk. There is some type of drilling risk or mechanical risk I can
Got it.
see, but not necessarily that much. Like I said, we try to mitigate as much as we can
Yep.
because, but we can't do anything about oil and gas prices. You can't do anything about that. But what we can do is we can drill in areas that we know the oil is there and we know we're going to get something. So it's not like we're taking huge risk.
And Jay, you know this. We're here to educate first and foremost. So we don't like talking numbers. But what is some of the possible returns that an investor can see? And maybe that's a broad number, but what is the possibility is what I'm saying.
Yeah, that's what I like, the 3X in 5 years. We've done the numbers and think about what the investors are and what the investors look for. And, I stick with 3X in 5 years because I feel like that we can go full cycle on a program. we can drill wells. They can get monthly income, which is great for them. Most people love monthly income to do something with that income, but also too, you have the time to sell the prospect. And we're building up in 2028. It's going to be great in 2028. I don't know. I just kind of made that up, but because we're
I'm doing research. I'm like, hey, Myra, you don't maybe
but
Trump will say something. You don't know.
yeah. Yeah, it takes a tremendous amount. I mean, people think that the old business is easy, or that some of these guys come to work for me, then they leave me and they go, "Oh, that Jay Young, he doesn't know anything. He doesn't know what he's doing," And all of a sudden they go, "Well, wait a minute, man. I mean, to build up a $2-3 billion company it's tough. It's going to be tough, but I love it, and that's my legacy. I'm 62. I'm in 3 years. I'm like 65. I'm not going to retire, but I am. That's kind of my that's how long it's going to take. So investors come along and look for us and look for the return because like I said, we get monthly revenue checks, but we also are building up assets. So we'll build up that 60,000 acre lease in Amarillo. We'll drill 30, 40 wells out there. You got to deploy capital. You got to have money to deploy capital. How do we get money? Well, that's having these offerings, but you have to make sure that you take care of the investors.
100%.
Like drilling other areas as well, but you're developing up these acres. So our goal is to either, we could go public ourselves and have a big divestiture or have clients that have shares or whatever in a few years, or at that point we sell to Exxon or another oil and gas company and say, hey, we want $3 to $5 billion, and here's the production, here's all the locations that we have drilled, here's all the locations, because they don't want to just have an asset that's going down. They want to have, we may have 100 locations that we've already drilled, but we may have 200 to 300 locations that we've already mapped out that if they drill a well here, you'll get this kind of return.
So, question, you talked about investors. Who is eligible? Like if I wanted to invest, are you talking about strictly to or only to accredited investors?
Yeah, we have accredited investors, but there's a new term out there for an accredited investor, and I didn't look at that. I was on a trip when I heard it, and I haven't gone over it again. But yeah, accredited investors is best. You don't want somebody to worry about it. Don't worry about the money. It's like there's some investors that are like, oh my gosh, I got my monthly revenue check, and it's not $300, it's $250, and oh my gosh, it's like they're you don't if you're like that, don't invest in this project. Don't this is a 3 to 5 year return. We got to deploy capital. We've got to go drill wells. It's not easy just to go out there and pull a rig together and go drill a well. And I mean, you got to set it up. You got to get paid. You got to get the land. You got to get Billy Bob Thornton to get off, move over and do the deal. And there's a lot to it.
Jay, just like any project, it takes time, build it and it will come. So meaning the cash flow. So, you talked about, and I'm assuming King Operating has a couple or a single opportunity available right now. Correct me if I'm wrong.
We do. We have Fund 3. We're about almost, I'll say a halfway through or something funding it. So yes, sir, we are.
Okay, awesome. What, if you don't mind me asking, what are the typical minimums that you're requiring?
Yeah, we have some previous investors that we let them come in for 50 or 50,000 or 100, 200,000 is our normal. It's a $200,000 per unit program.
And then just to confirm, this is IRA, 401k, HSA qualified, so people can use their retirement dollars.
Yes, sir.
That is huge. So one of the things, Jay, is I've had you on quite a few times now, and I kind of consider you to be a resident expert, especially 4 generations of knowing about oil and gas. One of the things I've never asked you for is your book. Okay. I want to be able to offer this to our listeners. Is it possible if you could, we could get our listeners a copy of this? Click on the link.
Yeah, absolutely. Click on the link, kingoperating.com or whatever link that's, I don't know what's it.
We'll have it on the bottom. I promise to everybody that's listening. I promise. I always typically give Dennis Blitz, our president and founders book, as a giveaway, but I want to give your book as the giveaway this time around. I think it's
awesome.
And by the way, I did read a little bit of it from the hard copy that was at one of your events. I actually grabbed it without, I think, one of your team members knowing. Now the other thing is if somebody just wants to learn more about oil and gas, about King Operating, where can they find you?
We're at kingoperating.com. We're at jryoung.com. We're on LinkedIn. I got some I've really got some good material coming out in the next, 20, 30 days because, they're somebody's coming in Rachel's coming into our organization and she's new and she's asking me questions about, the oil and gas and typical, hey, one-on-one questions. It's about, hey, what's a pumping unit or how do you get oil out of the ground and what happens, and things of that nature. But we have a tremendous amount of. That's one thing I do want people to understand is I don't want people just to not know anything about it and they can know as much as they want to.
One of the things that I'm also going to do, we have quite a few IRA Club members that are listen to our podcast, and I'm going to actually take your hyperlink and add it, the Investors Row, right, hyperlink, and add it to this podcast where people just want to do some due diligence, right? Learn, look at the PPM, your pitch decks, some videos, webinars that we've done together. I know you talk a lot of numbers on there, so I will make sure to add that. Jay, any final thoughts that you want to kind of give out to our listeners?
The only thing, Ramos, I can think about is I appreciate you having me on. I love this business, and it is just incredible, and it is something that you could really, if you wanna participate. I wrote the book because I wanted people to understand it, but it's not necessarily 100%. But I wanted to, I guess, advertise or just tell people, hey, you know what? Oil and gas is an incredible way to make money. There's a lot of people, the Forbes list of people that have made money in oil and gas. Why can't the investor make money?
True story.
And that's the way that our program is set up. And I had a guy that thought the grass was greener. He went to work for another guy here in town, and he told me about the deal, and I'm like, oh my gosh, it's a terrible deal for the investors. The investors will never make their money back, and so.
Yeah.
I wanted to change this industry with everything that I have and just do this for the investors. Now we get a back end. Hey, I'm not saying we're not in it for the money too. We're going to invest in it. It's like my family invests in these programs alongside you, but too, I mean, I've got a great team of people. We have great assets right now, and we have a strategy that we feel works for the investors.
Well, at the end of the day, I always tell people invest in what you know and understand, right? But if you don't understand, I always tell people educate yourself first, right? It's about taking educated, calculated risks. And I kind of refer to you as the master Yoda of oil and gas. And if you want to learn more, click on that link below, right? And download his book. I want you to read it. Educate yourself always, first and foremost, before you jump into any deal. And if you want to talk to each other, right? Network. That's the main thing is he's giving you the information, do your due diligence, understand what you're getting yourself involved in. As Jay mentions, it's always important, whatever you feel comfortable with. If oil and gas is it, and Jay, four decades, right? 4 generations into it, is highly recommending this. So just learn from the Master Yoda, and then take it to the next step by making a phone call, because that's all I could do is just point the direction. Your job is to cipher through it. And then if you just want to learn more about IRA Club, about Jay, always visit us at iraclub.com/podcast. We'll have this hosted on there with just some more information. Great links below. Feel free to click on it. Jay, always a pleasure learning from you, my man. And I thank you for jumping on. Until next time, thank you, everybody.
Thank you.
The information contained herein is intended to help the viewer successfully navigate common IRS and Department of Labor requirements to help achieve successful results from their IRA. The information is not intended to replace information from your legal counsel or income tax professional. IRA Club does not offer or sell any investment. All investments have risk.